Welcome to Middle Class Matters Business News in English from Dr CMA Alagesan on the CAG Audit Report number 19 of 2023 on Bharatmala pariyojana scam of rupees 7,50,000 crore by Government of India in the road projects constructed under highways. Part number 34, 6.6.3 Safety Consultant. Road Safety Audit Manual IRC 88 of 2010 issued by Indian Road Congress stipulated for conduct of safety audits in 6 stages for new roads as presented below. During feasibility study, completion of preliminary design stage, completion of detailed design stage, construction stage, completion of construction, pre-opening stage, operation and maintenance use stage. Audit called for records pertaining to safety audit carried out during pre-construction stages up to detailed design stage, but MORTH or management failed to provide in spite of repetitive reminders. As per EPC or concession agreements, the safety consultant reviews all the design details which have a bearing on the safety of the users, pedestrians and animals involved in or associated with accidents. Recommendations of the safety consultants are to be incorporated in the designs of the project. In case of public-private partnership projects, the scope of safety consultant further extended to construction period and the operation period. In respect of post-appointed date, that is construction stage onwards, supervision by safety consultants while reviewing 65 sample projects, audit observed the following. In case of 19 projects, that is around 30% of projects reviewed, the safety consultant was not appointed. In other 16 projects, around 25% reviewed, the safety consultant was engaged after more than 100 days, ranging from 101 days to 761 days of the fixation of appointed date, which when projects were already in the construction stage and the design stage was already over. And in addition to above, as per agreement with authorities, engineers or independent engineers, they were also required to engage their own road safety experts. The safety experts were to be engaged for advising on project alignment, geometric designs of the project, and designs of the road junction so as to minimize accidents, keeping in mind the traffic data, probable black spots, expected road uses and type of traffic likely to use the road, provision of pedestrians, cyclists and intermittent transport. In case of 7 sample projects during the construction period, the safety expert of the authorities engineers or independent engineers were deployed for less than months, which was ranging between nil to 2.13 man months as against the requirement of higher man months ranging between 8 to 14 man months, especially when all these projects were either completed or nearing completion. The above indicated weakness in the implementing agencies on road safety aspects of the national highways. MORTH admitted in April 2022 non or delayed appointment of safety consultants. Recommendation number 33. MORTH should ensure that the independent professionals are timely appointed for the Bharatmala project so as to have better supervision of project execution and safety aspects. 6.7 Financial Convents. Audit during review of 66 projects is examined payments being released to contractors or concessionaires against bills or milestones, receipts and payments into escrow account, recovery of liquidated damages from contractors or concessionaires and other financial issues pertaining to the projects. Audit observations on the same were as follows. 6.7.1 Payment of price escalation. During the construction period, price adjustments for changes in price indices as per formula given in EPC or HAM agreements have to be considered over and above the value of work done by contractor or concessionaire. In case of HAM projects, 40% of bid project cost BPC is to be paid to the concessionaire during construction period, while remaining 60% is to be paid during operation period. The concession agreements provided for payments of bid project cost after adjusting for variation in price indices every month between the reference index date preceding the bid date and the reference index date preceding the date of invoice, which was to be termed as price index multiple. Similarly, in the case of EPC projects, the stage payments were to be made to contractors on achievement of different stages of the project as detailed in Schedule H of the EPC agreement. The payments for each stage were to be adjusted for increase or decrease in index cost of various inputs, that is labor, cement, steel, bitumen, fuel and lubricants, other materials and plant and machinery for the month which was 3 months prior to the date of invoice against the base date index. NHAI headquarters, considering different methodologies being followed by field officers for computing price adjustments in HAM projects, issued clarification on December 2020 for the price index, as per which the following formula was applicable for computation of price adjustment: WP 11 wholesale price index for reference index preceding the bid date, CPII consumer price index industrial worker for reference index preceding the bid date, WPI 2 wholesale price index for reference index preceding the invoice date, CPI 2 consumer price index industrial worker for reference index preceding the invoice date. Milestone payment equal to 8% of 40% of BPC into WPI 2 into 70% plus CPI 2 into 30% divided by WPI 1 into 70% plus CPI 1 into 30%. Audit observed that the above clarification given on 2nd December 2020 by the management for price adjustment formula for a HAM project was not flowing from the terms of the concession agreement. As per audit interpretation of agreement terms, the value of work done should be first divided into ratio of 70:30 and then the price index multiple of wholesale price index should be multiplied with 70% work done and price index multiple of consumer price index should be multiplied with 30% work done. Hence, the formula for milestone payment should be 8% of 40% of BPC, 70% of WPI2 divided by WPI1 plus 8% of 40% of BPC into 30% of CPI, CPI W2 divided by CPI W1. Thus, instead of applying wholesale price index multiple to 70% of work done and consumer price index multiple to 30% work done, the management developed a hybrid price index multiple with 70% impact of wholesale price index and 30% of consumer price index, and this multiple was then applied to whole work done. The new formula was also against the interest of exchequer, as in the case of all 6 sample HAM projects test checked. Excess price adjustments to the tune of 54.29 crore was paid to concessionaires. Audit, while reviewing 3 HAM projects, noticed that though NHAI was making monthly payments to concessionaires in line with the Atmanirbhar Bharat scheme, the escalation was being worked out by taking indices at the time of final settlement of milestone payments rather than taking indices of the month for which payment was being made, resulting in excess payment of price adjustments to the concessionaires. Audit further observed that in the case of HAM projects of Chittur Mallavaram, Anandapuram, Panditurai, Anakapalli and Mahbubad Tenet, the milestone payments were made to the concessionaires based on consumer price index industrial worker published on all India basis rather than the indices published for Guntur, Visakhapatnam and Alwar and Ajmer respectively. The cumulative impact of above was that it resulted in excess payment of price adjustments to concessionaires of these 5 projects for an amount of 42.74 crores. And in case of package 2 and 3 of Kohima Jessamy section, there was unjustified change in price adjustment formula of these EPC agreements after more than 1 year of entering into EPC agreements, whereby contractor was benefited by getting extra payment of price adjustments to the tune of 2.13 crore up to 31st August 2021. Thus, due to wrong computation of price adjustment payments in case of HAM and EPC project concessioners, contractors were paid excess price adjustments to the tune of 99.16 crore. MORTH replied in April 2022 that in the case of Anandapuram Panditurai Anakapalli, the excess amount of 17.71 crore was already recovered from concessioners. Similarly, in the case of Munuba tenant, 1.81 crore was recovered at the instance of audit. However, in the case of Paniala Mornarula Bypass Panchari Kalan Package 1 project, it stated that payments were released to concessioners as per Aptanirmar Bharat scheme. MORTH reply in the case of Anandapuram Panditurai Anakapalli and Mahbuba tenant were not verifiable in view of no supporting documents attached with the reply, while in the case of Paniala Mahur Bypass Panchari Kalan Package 1, reply was not tenable because if monthly payments were made under Aptanirmar Bharat, the price escalation should also have been computed based on monthly escalation only, instead of taking indices at the time of final settlement of milestone payments. MORTH did not furnish reply in case of other projects. Recommendation number 34. MORTH should review the interpretation of price adjustment formula in HIM projects so as to avoid undue benefit to concessioners. 6.7.2 Escrow account. In public-private partnership mode of projects, the concessioner was required to open an escrow account for routing the inflows and outflow of funds for that projects through escrow account. As per the concession agreement, the escrow account was to be made operational prior to the appointed date, and also the concessioner was required to deposit and cost to deposit in respect of the project for the following into the escrow account: all funds constituting the financial package, all relevant from or in respect of project, including proceeds of any rentals, deposits, capital receipts or insurance claims, etc., and all payments by the authority after deductions of the outstanding payments. The deposits in the escrow account were to be appropriated in the following order: all taxes due and payable by concessioner for and in respect of the project, all payments relating to construction of the project subject to and in accordance with any condition set forth in the financing agreement, operation and maintenance expenses subject to any ceiling, if any, set forth in the financing agreements, operation and maintenance expenses and other costs and expenses incurred by the authority in accordance with the provisions of this agreement and certified by authority as due or payable. Any amount due and payable to the authority, monthly proportionate provision of debt servicing, all payments and damages certified by the authority as due and payable to it by the concessioner, and monthly proportionate provision of debt servicing in respect of subordinate debt. During review of escrow account statements of public-private partnership projects, following deficiencies or discrepancies were observed. 1. Paniala More Narula Bypass Pachari Kalan Package 1. Although as per concession agreement and escrow agreement, the amount was to be released from escrow account against payments due only, it was observed that an amount of 46 crore brought in by concessioner during 4th November 2019 to 6th November 2019 was released to the EPC contractor on the same day on which they were credited to the escrow account, when in fact no bills were due for payment to the EPC contractor on these days. MORTH replied in April 2022 that amount was paid as mobilization advance to the EPC contractor and was later recovered from EPC contractor. Reply of MORTH may be viewed against the fact that as per the concession agreement and the escrow account, the payments from escrow account could be released only on due basis. Hence, any advance being released to EPC contractor from escrow account was in violation of the contractual terms and clauses. Please like the video, subscribe to the channel. Please share it to all your friends and relatives as information. As taxpayers of this country, we should know how our money is swindled by the politician, contractor and the executive nexus. Thanks for watching.